All right, guys, let's try this again. Part two. Let's hope sounds good. You guys should be able to hear me. So let's talk about Euro USD, the trade that we had for today. Now on Euro USD, there's certain things I want you to take in consideration, and the main thing is always keep the principles, right? Never forget about the principles. Let me go ahead and delete all this because somebody went ahead and did the whole markup for you guys and forgot to put the audio. So let's just delete that. We'll get to it. Let's go. So one thing I want you guys to pay attention to primarily every single time is the following. You want to be able to understand the overall bias. In this case, the overall bias is bearish. As you guys can see how the overall bias is bearish, you want to look at it from a perspective of possibilities and probabilities. So it's more probable for you to be able to be profitable on trades in which you are selling than it is on trades that you are buying. Therefore, you want to be looking for selling trade possibilities, right? Selling trade entries. Now, as we go ahead and go to the 15-minute time frame, one thing that you can identify is the following. We can see how market down below had created some nice equal lows. Okay, I was paying attention to these equal lows. And we can also see above we have some nice equal highs. Now, one thing that you also want to be looking into is the time and the price. What I mean by time and price is you want to know what time frames you like to trade and what time zones you like to trade. For example, when I used to trade London session, I used to look for the manipulations or expansions in the market. Now that I trade New York session, I like to look for the retracements for continuations into the market. So depending on what session it is that you're trading, you want to be able to identify and adapt towards what the market does on a daily basis. In this case scenario, since I trade New York, if London is doing this, I'm waiting for New York to do this for us to be able to enter for those selling positions. If I'm trading London and I see some equal highs or equal lows, I'm waiting for market to do some manipulation and then do this. Okay, so I'd be looking to enter on these lows. Now, as we can see for New York session, I was waiting for market to have a retracement up over here. But before I get into the main entry, which is in this area, let me talk to you about how it is that you would have been able to take advantage of that, even though market had created some equal highs. Okay, so as we can see right here, market created some nice equal lows the day prior. As well, market had also created some nice equal highs the day prior. Entering London session, we had that nice little manipulation to the downside right over here, and then the expansion to the upside. As we can see how market was able to take out liquidity. In this case, was able to take out money that was left up there and left the money down over here. As we saw market reach these highs, we could have considered as market potentially creating some equal highs. Now these had already been taken out and market came up into the zone. Now what I was looking forward in this area is primarily, I wasn't taking any trade because at this moment I was asleep. And if we go ahead and put another example, we can see how market simply came up into a nice point of interest. Now when market came to that nice point of interest, we had an immediate reaction, which is sexy, right? This is sexy to see. And this is what I saw right here. I saw market come down and create us, once again, equal lows. These equal lows right here literally gave me the overall confirmation and told me, check, this is going to be a nice move to the downside. Okay, we're about to make some money. Now, when it comes to this scenario, you want to look at the following. You want to look for retracements and always base yourself off of principles. The overall bias was bearish. I know a lot of people may have been probably fooled right here. Market come down, create these equal lows. Some people may have thought that it was respecting this point of interest and looking for those moves to the upside to take out these bigger equal highs. However, if you pay attention to the overall scenario, the bias has been bearish. We have been creating overall bearish scenarios. We have been creating bearish scenarios, and this was the previous high. So unless the market broke this high, then yes, I'd be looking for buying scenarios. But since market has not broken this high, it just came up into equal point. No, I am not looking for bullish scenarios. Okay, I'm still looking for bearish scenarios. As we approach the market, one thing that I want you to take in consideration is make it easy on yourself. Go ahead and always look for discount levels, right? Things that I like to take in consideration. One of my favorite levels is going to be right here, the 78.6. It's one of my favorite levels to take in consideration. Now, why? Because I know if market comes up over here, I'll be able to have a nice risk to ratio trade where I can go ahead and be profitable, even if I lose 3, 4, 5 in a row, because one trade alone can make up for all those losses. Okay. Now the other thing take in consideration is any other confirmations. What confirmations do I have at this moment? Well, one confirmation is I have this equal lows where money was created, and now I have these equal lows where new money was created. Secondarily, bias bearish. And one of my favorite right now that I can see, okay, that I was able to identify at the moment of taking this trade in the morning was that market had a accumulation of price. And the accumulation of price was correlated with our 78.6 level. Now in this case, you can do two scenarios. You can take the trade directly off of that 78.6 scenario, put your stops above the highs, and then TPs. I took my TP just to this liquidity. I didn't take it all the way down over here. This was more enough for me because I understood that market could potentially reverse from what? From our previous point of interest, where we currently see how market did come test this area and now having a nice little retracement. So I took just these lows. Now you could have taken that first scenario, put a limit entry for that move, or you could have gone to the 5-minute time frame. And on the 5-minute time frame, you could have done the following. You could have gone ahead and waited for the market to shift. In this case scenario, we can see very nice how market was creating lows, highs, breaks the lows, and comes back high into this section. And from there on, we're able to see that nice rally to the downside. As we see this, our stops would have may have been a lot closer, could have been right here because we're taking considering the 5-minute. Personally, my stops were about 7 pips. So I was able to have a nice risk to ratio from this trade alone, just going to the lows. I was able to have almost a 1-to-4 risk to ratio and have a nice day. This happened in the span of about an hour and 30 minutes. If you go ahead and focus on time and price, as far as the trade session that you want to trade, you will have rapid moves and you'll be able to understand what happened within the market. So with that being said, guys, I hope you guys enjoyed this video. Let me know what you'd like to see next on the comments down below. I'll be doing breakdowns moving forward on this channel, and then vlog/breakdown education on the vlog channel. So I hope you guys enjoy that. If you guys want to go ahead and look at any of those links, they're going to be down below. And as always, stack those likes, stack those comments, and also stack them subscribes. So I'll see you guys next time. Have a wonderful one, and glad to be here again. Have a good one. Bye-bye.